GSFM Symposium in partnership with CI Global. My name is Gary Freilich. I'm a partner on the private equity investment team at 26North Partners. Today, we're going to talk about a couple of things. First, we'll introduce ourselves and myself, talk a bit about our private equity industry in which we participate, what's happening and the opportunities that creates in the category, and what we specifically at 26North are doing about it. So to start and introduce 26North, our firm was founded about 3 years ago in 2022 by Josh Harris. Josh, if that name does not ring a bell, was one of the co-founders of Apollo Global Management, starting that in the early 1990s, and fast forward more than 3 decades to the present, today is one of the leading global alternative asset managers. Josh left there in the early 2020s and started our firm a few years ago with a vision of bringing the capabilities, the resources of a large cap manager like an Apollo to the middle market, where we at 26North focus our efforts. We conduct our business across a couple of different strategies, including direct lending, insurance, and of course what we'll talk about in more depth, private equity. Our firm takes a really hands-on approach to what we do. We say that we are operationally oriented, or we roll up our sleeves and we like to, quote, earn our return, really get into the weeds with the businesses that we invest in and partner with. And so what does that mean? What's happening in the industry around us? I'm sure you've all heard a lot about private equity. It's been in the news, of course, it always is. And what we're seeing is a really interesting moment in time, a real inflection point in our category. For decades, in fact, up until a few years ago, the way many private equity firms earned their return and made money was really with a lot of very strong tailwinds at their back. You didn't have to be great. All that you needed to believe was what happened for a very long time, namely interest rates kept falling, and that has a mathematical correlation with valuation multiples increasing. Lower rates, higher multiples. And so what that means for private equity firms for a long time was you bought something at a certain multiple, and even if you didn't do much with it, 5 years later, when you went to go sell, you generally got a higher multiple for it. The macro was your friend. All of that came to an end in 2022 as interest rates really rose and, frankly, a shakeout began to emerge in our industry. You had winners and losers. The winners were those that had real depth of capability, could actually be proactive in driving the outcomes for their partner companies, the businesses in which they invested, because they could do something discreetly value added. Those that were simply playing a sort of a set it and forget it strategy, it's been a tough slog for them for the past few years. What does all that mean for us? Well, in the context of winners and losers, you have a lot of companies that are owned by private equity firms who frankly paid too much, over-levered their businesses in so doing, and have had very lackluster growth in recent years, but are having real difficulty coming to a reckoning with the reality of the present tense valuation multiples of the companies that they own and paid too much for some number of years ago. For us, that's a great opportunity to be a front-footed solutions provider to those investment firms, to our PE brethren, and say to them, we will come up with a bespoke solution that solves for your needs, but also creates a great opportunity for us to enter these businesses at a compelling valuation and oftentimes with structure that would not be available in other market conditions were it not for all of the backdrop comments that I just offered. And so what we are doing today is we're going out to many of our peer firms and proactively saying, where can we find opportunities to work together? To date, we have had the opportunity just in the past year to find 3 such opportunities. That's a very high hit rate in our industry. We're going to continue to do that as well as take advantage of other opportunities, including in the public markets, where you see this noted bifurcation where the large cap companies, the ones that garner all the headlines, they're doing great. But what gets left behind are the smaller companies, the sort of the afterthoughts, the forgotten ones. Not to say they're bad businesses by any stretch, but they simply don't garner the attention and the resources of public equity investors and research analysts. That too spells opportunity for a firm like us. whether it be in the form of a take private, carve-outs from these businesses, and potentially even investments into those public platforms. So that's where we're seeing opportunity. And then the question becomes, what do we actually do with these businesses once we've made an investment? And this is really where, in our view, we are at our best, where we are most differentiated. We have a group at 26North that we call our Alpha Creation Team, ACT for short. Many other private equity firms would call that their portfolio operations capability, but the truth is what we are doing looks nothing like what you would see at most other private equity firms across Wall Street. This is a group that takes a very hands-on approach, is literally at the companies most of the days of the week for years on end through the duration of our investment process, helping to really accelerate top-line growth and think about driving operating leverage and efficiencies in the middle of the P&L, both of which combine to result in what we have seen already in the early days of our initial investments, accelerated profitability and growth. Very simply, we are taking control of our own destiny and driving the outcomes that we are seeking. We are not hoping that the broader industry landscape provides us with the path to the promised land. So, to put this all in conclusion, what I hope that you will take away and consider as you move forward is private equity is something that you'll read a lot about, and in our view, there's good private equity, and there's, frankly, less great opportunities in this space. And if you are willing to do the work and think critically about who are those managers that can really take control and empower the outcomes that we as a category are seeking, I believe what you will find is that as part of a broader, balanced, and diversified portfolio, there really is a great home for private equity. When you look over the long run, the industry average returns are outsized relative to just about any other asset class. And so that becomes then a question of manager selection within the asset class, again, in the context of an overall portfolio. I hope that this is the first of many conversations that we'll be able to have in due course. Thank you for your time and attention.